Welcome to the Rational Egoist. I'm your host, Michael Leibowitz. In the news of late, there's been a lot of talk about the Federal Reserve and inflation and how the Federal Reserve is going to curb inflation. And there's the question of, do we have a recession coming? So, here to explain what's going on is a guy who has earned two master's degrees, one in business administration and one in chemical engineering. He's written articles on the trade cycle and monopolies. And in 2016, he founded Americans Against Monopolies. Mike Holly, welcome to the show.
Thank you. Nice to be here.
So, I guess we can go back to the beginning. When was the Federal Reserve created and why was it created?
It was created in 1913, basically because they wanted somebody to control the supply of money that they claimed was causing booms and busts in the economy. It was in response to the 1907 crisis, where J.P. Morgan had to bail out the country, and he and a cadre of very influential businessmen convinced the government to create this Federal Reserve.
In your view, has it ever fulfilled its mission?
Maybe for the cadre of highly influential um, businessmen it has, but for the average person on the street, it's been a disaster. I've been doing analyses on it, and it's caused five major stock market crashes that have wiped out people's wealth and destroyed their livelihoods.
So we've had five major stock market crashes. Have we also had five major recessions since the advent of the, or depressions, recessions since the advent of the Federal Reserve System?
Well, I would consider the major recessions to be the ones that occurred after the stock market crashes, especially the Great Depression, of course, and the Great Recession, and the very severe recession in the early 1980s.
So the Austrian theory of the trade cycle seeks to explain how it is that money causes the trade cycle, right? So first of all, what is the Austrian theory of the trade cycle?
Well, it has to do with the fact that the Federal Reserve or the central bank expands credit at the banks. And by doing so, they create an artificial boom. And, and they do it continually and successively to lower interest rates. And business and consumers then increase their borrowing, and their purchasing, so they can expand the economy. The problem is, when you set artificial rates for too long and for too low, what happens is you get excessive credit creation, inflated asset prices, speculative bubbles, and low savings. And this has to come to an end at a certain time. And when it does, what happens is the Fed comes in, and they crash the economy by undoing what they did before and creating high interest rates. So they just go back down to where they were before, often even further than they were before, because of the everybody's panicking to get out of the market when they're doing this.
So the one thing you didn't mention there was time preference, because the Austrian theory, the time preference element is that interest rates serve as an indicator to whether society or people in society are saving for the future or spending now. So when interest rates are low, that is in a pure free market economy, that would indicate that people are saving money for the future. The problem is, right, that with the expansion of credit by the central bank, the interest rate goes down, but there's no actual saving. But nonetheless, entrepreneurs see that low interest rate and assume they're saving. And then what they do is invest in production for future consumption rather than present consumption. But that's not what actually is in demand. So you end up with a malinvestment, the Austrians call it. Basically, what you end up is with a flawed structure of production. Would that be accurate?
Yeah, that would be true.
Okay, do you, in your view, do the Austrians provide an adequate explanation for the history of the trade cycle, for all the trade cycles that we've seen?
Not really. One of the big problems is I do believe the Keynesians are correct that um, deficit spending also creates a stimulative effect on the economy, which, along with the lower interest rates, stimulates the economy too far in an artificial way, causing problems. And then what the government does is they decrease the spending, and that, along with the raising of interest rates, has a multiplier effect that can create even bigger problems. I think the Austrian cycle was more based on before we got into this high debt economy that we're in back in the 80s. Interest rates weren't enough to propel the economy to create an artificial boom. So Reagan created deficit spending, which also has a big stimulative effect on the economy. But of course, then it goes down even harder than it would have when they have to raise the interest rates.
Okay, so here's where I find the flaw in that, right? And you can tell me how I'm wrong. If the government simply deficit spends, absent an increase in the money supply, then they just make up for that with borrowing. That's how they pay back the debt that they're accumulating or the deficits that they're spending. So there's no actual increase in the money supply. So how could there be a boom? It seems to me that money would just be taken from some investments and put into the ones that the government finds more attractive or more lucrative. So how would you have the boom phase, the inflationary phase, absent an increase in money? Because even in your analysis that you just said, you said that they're combined with a lowered interest rate, right?
Yeah, they're combined.
So
They
but if you
happen
don't,
simultaneously.
yeah, so if you don't have that lower interest rate, if you don't have the increase in the money supply, then deficit spending on its own couldn't cause the boom. All it could cause is investments going in different places than they otherwise would, right?
The it's true that all the crashes occur, all the booms occur when the money supply, when the credit is expanded. But however, we've seen since the 1980s, we've seen another stimulative effect, which is the deficit spending, which has also created a stimulative effect. But it's not done without the bank credit.
So if you take the 80s, for instance, right, you had a lot of factors going on. You had the tax cuts, which is what the supply siders would say caused the boom. You have the deficit spending, which is what the Keynesians would say caused the boom. So how do you sift through that to figure out that it was the deficit spending and not the credit expansion or not the tax cuts that were responsible for the boom?
Well, interest rates were very high at that time when the boom started. And so I feel that they needed also another stimulus to get the economy going. I mean, interest rates were, it's true that the credit expansion was occurring, but the interest rates were still very high. And so I believe that the deficit spending was also needed to stimulate the economy.
Wouldn't Austrians argue though that when Laffer, not Laffer, I'm sorry, Volcker, the Fed chairman, when they raised interest rates and you had the initial recession in the, I think it was 82, if I'm not mistaken, you had the initial recession, but then once the economy crashed, wouldn't the Austrians argue that you then had a base from which to have a real, real economic growth, and that the tax cuts and the deregulation that took place at that time, as minimal as it was, could also explain why there was such growth in the 80s?
I think if the deregulation would have been effective, that would have been true, but it was very poor deregulation. I mean, I
Okay.
worked on the electricity deregulation, and it was just all rigged for the utility monopolies. In fact, that's why I got into this analyzing the business and the monopolies, because of exactly that point. The Austrians are assuming that the economy is a free market economy, and it's not. There's too many preferential regulations favoring monopolies, and it's not, the economy is not able to grow without lowering interest rates and deficit spending.
Okay. You just said that the Austrians assume it's a free market economy. And I read this morning where you wrote that the Austrians haven't, done a lot on monopoly. But Mises wrote on monopolies as far back as 1911 in Theory of Money and Credit. I mean, in 1912. In 1922, he addressed the issue again in his book Socialism, and he also addressed it in Human Action. I think that came out, I want to say, 49. Rothbard in Man Economy Estate devotes over 100 pages to monopolies. And of course, Dominic Armentano, the professor who's an Austrian, that was his thing, was addressed to monopolies and monopoly pricing and antitrust laws. So one, the extensiveness which with the Austrians critique interventions in the economy, whether it was Mises, Rothbard, Kerzner, Hayek, and also the extent to which they actually addressed monopolies. How can you say that they're assuming it's a free market? One, and two, how can you say that they don't deal with monopolies?
Because it's the same, for the same reason that you just said, that they would expect the economy to grow in the 1980s with deregulation. That would assume that that they believe the economy is free, but it wasn't ever even close to being free in the 1980s.
Well, they wouldn't argue that it was free. What I actually said was the deregulation, as minimal as it was. It wasn't like Reagan came in and just gangbusters deregulated the economy. All I was pointing out was that there were other factors going on, and you have to sift through the various factors that are going on to assume, I mean, to distinguish why an economy is growing. But Rothbard, especially, certainly would never have argued that there was extensive deregulation in the 80s.
Okay, but there wasn't.
No, there wasn't.
The economy has trouble growing if the monopolies are able to restrict supply. Uh, People can't respond to the inflation. The people can't respond to the bust by getting into business and increasing supply if monopolies control the supply, and the monopolies are very slow to increase the supply.
Okay, so I think I should have asked you earlier. How do you define monopoly? First of all, what is a monopoly?
I use the legal definition of a monopoly.
Okay.
That's when the monopoly can exclude competitors and affect the price of the good or service that they're producing.
Okay, and what causes monopolies?
Government regulations. Well, that's what the Austrians and the monetarists believe, and that's what I'm finding to be true, is that government policies create monopolies. The problem is they haven't been very concerned about these monopolies. They've largely ignored them, other than pointing out that government is creating them.
Okay.
The Keynesians, on the other hand, have expressed great concern about monopolies, but they claim that they falsely claim that they're created by markets, and that's not true. So we got a problem here. Nobody's really addressing that the government regulations are creating monopolies and are restricting supply. and preventing growth in the economy.
Okay, so the solution then, right, would be to deregulate the economy. So when you're in your critique of monopolies, you're not saying that the government needs to do more. You're saying the government needs to do less. For instance, getting rid of antitrust laws would be, I personally think that'd be a great thing to do for multiple reasons. But is that your view? So are antitrust laws a mistake? In other words,
They're ineffective. The only way to deal with monopolies is to get rid of the government policies that are creating the monopolies. Antitrust is a fake way of dealing with them. I mean, all you get is more monopolies when you do it that way. You get different monopolies, but you get more monopolies, like like you saw with AT&T and then IBM and then Microsoft. They were all broken up by antitrust, but monopolies always followed them.
yeah,
The
it's
big four today.
yeah, the companies that are clamoring most, it seems to me, for antitrust law enforcement are companies that don't want competition. They're not saying we need antitrust laws because we need more competition. They don't want companies to be able to compete with them to, beat them and for market share.
Yes, monopolies always start, or they appear to start with things like patent protection from competition, and then they move on when that expires, when there's only so many patents they can use to protect their markets. Then they go to the government and say, "Will you do this?" I mean, it's kind of like AT&T. They held the monopoly over phones for 20 years because they got to the patent office an hour before another guy did. So, but then when the patents ran out, all this competition rushed into the marketplace. But then they said, "Oh no, we want a monopoly," and so the government gave them a monopoly over the phone system. And then they were able to use that to create Bell Labs and patent technologies in other areas, and they controlled the whole tech sector during that time.
What, in your view, are the most destructive or dangerous monopolies today?
The bank charters restrict competition in banking. There's uh, there's all sorts of banks that there's all sorts of banks, but there's only a few that get the preferential treatment from the Fed and are able to do all of the things that banking requires. And they get the money from the Federal Reserve. They get the special treatment. Um, then there's housing is a terrible monopoly. I mean, we got all this zoning that's going on that's preventing people from building homes, and departments and things like that. We got healthcare that's totally monopolized. The licensing of medical professionals, the certification and need required for medical facilities, the regulation of insurance, requiring only certain insurance companies. We got the agricultural subsidies that prevent the development of other crops. We got all sorts of energy monopolies, subsidies, preferential environmental regulations. We got auto bailouts, and the SEC has protected the big car companies. The biggest problem with tech so far is the patent protections, but they're going to move probably one day to, like we were just talking about, to other government protections. And also, education is another big one because we have taxpayer funding of education, and that's creating all sorts of monopolies at both the public school and at the college level, higher education.
So, what about the argument that all the things that you're naming, licensing and barriers to entry and uh, charters for banks, that all these things are used to protect consumers? You don't seem to buy that. Why not?
Well, that's not what it shows. I mean, that's what I'm working on. I mean, that's what I do, is see the effect of these different regulations. And uh, I mean, JFK, RFK Jr. is kind of having a campaign where trying to he's talking about this regulatory capture and the way that monopolies are able to control the supply through these regulations. I mean, it's possible these regulations and theoretically could be done for the interests of consumers, but they're not. They're done for the interests of business because of the regulatory capture.
What is regulatory capture?
Oh, regulatory capture is when the businesses influence the policymakers to create policies that favor them, like like restricting, especially restricting supply, keeping other people out of the marketplace.
Right. So the government creates an agency to watch over a given sector of the economy. And then what happens is the companies doing business in that sector gain influence over the very agency that's supposed to be watching them, and they use it to protect them from outside competition,
That's
basically to create barriers to entry.
yeah.
Okay. I want to shift a little bit back to the inflation. In your view, what is the genesis of the current inflation?
Um, well, the monetarists and the Austrians believe that inflation is only created through monetary expansion, while the Keynesians believe that there is also cost push inflation, supply driven inflation. I mean, it depends how you look at it. If you say, well, okay, demand driven inflation through monetary expansion, I mean, that does create inflation, especially if the industries are able to restrict supply. It's demand and supply. But the Austrians and monetarists are correct that if you the tighten the credit expansion, you're going to stop the inflation because the economy won't be able to increase prices. I mean, prices are increased through monetary expansion,
Yeah.
but you still got to blame the supply side because they're restricting supply. So if you keep restricting the supply of money because these people are restricting supply, you're going to get a suffocation of the economy. So I believe you've also got to consider the supply side, like the Keynesians do. Even though, yeah, I mean, the monetarists and the Austrians are right in theory, but I mean, let's work on the supply side also. Let's not let the monopolies restrict supply.
Oh, I don't think the Austrians would argue in favor of letting government created monopolies restrict supply. I mean,
Well, they're saying that monetary expansion is the cause of inflation. And so what we got to do is we got to restrict the supply of money. And that's not enough. We've got to work on the supply side also. We've got to open up the supply so that supply can respond to demand.
well,
And
that's
that's what the
true.
Keynesians.
But you wouldn't argue as the Keynesians would that for instance, that outside an increase in the money supply, there could not be inflation under those circumstances, right?
I don't think so. Well,
Right.
it depends if you're talking about economy-wide inflation
That's what I'm talking about. Because
or
obviously,
industry
yeah, if
specific.
you were in one industry and you restricted a supply in that industry, through the restricted supply, all things remaining equal, the price would rise in that industry. But then consumers would have to direct their purchasing from other products whose prices would then drop. So the
Yeah,
only way you could have it to be economy wide would be through monetary expansion.
that's right. But the problem is if you cut monetary expansion, then then you're going to these other, especially if it's a necessity that's inflating, like healthcare and oil did during the 1970s. That's going to kill other industries because they're necessities and their prices increasing. So that's hard for policymakers to do. You've got to, in theory, yeah, the monetary expansion, it can't occur without the monetary expansion. That's
Yeah.
true. But you've got to deal with the supply side also.
Sure. Yeah, I wouldn't disagree with that. I think we need to free up the economy and ultimately including the banking and the money sectors and not have the government trying to micromanage everything. But my question though was the monetary expansion that's responsible for the current inflation. For instance, we frequently hear, I frequently hear on in social media and from right wing radio that it's Biden's fault. This is Biden's inflation, but the money supply was expanding long before Biden took office, as were the supply restrictions that you're talking about. I mean,
Right.
you restrict supply of a good and increase the supply of money, and you're going to end up with inflation in if not just with not in the economy in general, you're going to have it, but also with the specific products where the supply is restricted. But I remember under Donald Trump when he was putting pressure on Jerome Powell to keep interest rates low. I remember under Donald Trump that where he, the economy was partially shut down during COVID. And, before that, even we had monetary, what would they call it? I forget now, but quantitative easing was taking place under Obama. So the money supply was expanding ever since the Great Recession, really. And I
Hmm.
remember reading that in Hayek in the 70s. I wasn't alive in the 70s. Hayek wrote it in the 70s. But he wrote that he was surprised that the monetary expansion was able to go on as long as it could without a recession. So it can go on for quite some time, but the inevitable result is going to be the crack up boom where the economy, you go into inflationary period and then the recession. So am I right in saying that this inflation did not start under Biden? I'm not saying he's innocent. He's continuing the same policies. The Fed continues the same policies, but it began a long time ago, right?
You're right. This boom began in about 2007. I mean, that's when they started expanding the credit, and but it still had to crash because of the lag. And then since 2010, the boom has been started, or 2008. I can't remember 2008 or 2010, and the government has been lowering the interest rates to practically nothing. The quantitative easing, and also the heavy deficit spending. So they've been creating a boom in the economy that was going to result in inflation. I mean, it did involve an asset inflation, and it would have eventually involved in created consumer price inflation. But Biden kind of accelerated the situation with the heavy deficit spending and the heavy um, monetary policy, and also the COVID did do some. They did the shutdowns of the economies that also created supply shocks to the economy. So it accelerated, but from what I'm been analyzing, all these markets were heading for inflation anyway. I mean, you look at energy, especially with this drive to wind and solar, that's more expensive. These the energy was becoming more expensive. The oil was becoming more expensive. The housing was becoming more expensive. All sorts of markets were being affected. So I believe that Biden accelerated it. I can't even totally blame him for that because Trump had big spending too during the
Sure.
before he left office, huge deficits and low interest rates, like you were saying. So yeah, he was in it as much as Obama and and Biden were.
So, in your view, in the stats in the data you're looking at, do we have a recession on the horizon? Is a recession coming?
Yeah, a recession is definitely coming. I mean, we haven't been growing all that quickly with interest rates at zero and huge deficit spending. How are we going to grow with 5% interest rates and mod lower deficit spending? They're trying to control deficit spending. I don't know how deficit spending is going to go exactly, but it's not going like it was. So the economy can't possibly grow at the same rate that it was with zero interest rates and this deficit spending. So I definitely see a stock market crash and a recession.
All right, put on your Nostradamus hat. Do you have any idea when this is going to occur?
Uh, I haven't been involved in this really long enough. I mean, I've been working mostly in monopolies, and so I didn't start looking at it until December. But I've been kind of watching the uh, the prognosticators out there, and I kind of like Harry Dent. Um, he to me sounds like somebody that knows what's going on here, and he was predicting this summer sometime. But there's one big problem though too is that I don't know exactly what's happening with deficit spending. I mean, they may be increasing deficit spending, and that would prolong it a bit longer than than it is. So I'm not sure exactly, but I would think that I think I'd go with Harry Dent.
All right,
But
before
I don't. But
no, no, go ahead. Finish. I thought you were
but
finished. That's all.
I haven't even, I've been looking at booms and busts, but I haven't been looking at, micro booms and busts or micro analysis of them. And I know there's generally a lag period, but the stock market definitely has a big effect. I mean, it tends to precede recessions. So there's kind of this hype going on with AI and stuff. So there are things that are kind of holding it up, but I think definitely it's heading for a crash, and that will hurt investment, and people will have less money. Companies will, have to get rid of employees. There'll be unemployment, bankruptcies, etc.
Okay, before I let you go, is there anything I should have asked that I didn't, or anything you want to say about these topics? The Fed, inflation, monopoly.
I think you pretty well covered it. Did a good job.
Thank you. Okay, well, where can people find you? Do you have a blog, a website? I know you founded the anti-monopoly company. So where could they find you?
Americans Against Monopolies. You just Google it, it comes up, and then you hit on it, and you get right to the front page.
All right. Thank you very much for joining us today. For now, this is the Rational Egoist. I'm Michael Leibowitz signing out. Remember, like, share, comment, subscribe. Until next time.